Good morning everyone and welcome to Morning Markets on Friday the 10th of November. Today we'll focus in on some commentary from Federal Reserve Chair Jerome Powell yesterday and look at UK GDP numbers from this morning. So looking at some of the comments that Jerome Powell made yesterday, it was very much viewed as his comments were more hawkish, and they certainly did send bond prices lower and bond yields higher over the course of the day. But when we start to look into some of the comments that he was making, there's not a lot has changed from those comments that came at the end of the Federal Reserve meeting, the press conference following the interest rate decision. And what he really did discuss was that inflation and the progress towards achieving that 2% inflation goal in the US is challenged, or it's not assured in his words, and that inflation has given a few head fakes in recent months. That certainly was just a very subtle change in language that did catch the attention of market participants and allowing and illustrating that by weaker bonds. He also did say that if it becomes more appropriate, that they would tighten policy further and they would not hesitate to do so. Again, very similar language to use just a number of days ago, but interpreted slightly differently by the market. It's also worth noting that he also did highlight the ongoing surprise and something that we as a team have been discussing, that resilience in the US economy. That's certainly evident at this point in time, despite the significant change in interest rate policy we've seen, or overall financial conditions, which are much tighter. So that was the US. Turning then to the UK this morning and just looking at the growth data that has come out for the third quarter of the year. Basically 0% growth. We've technically avoided a negative growth quarter, which would have been a contributory factor to a more recessionary environment. But really the more important point I think to highlight for everyone is just that growth in the UK is anemic. It's very hard to come by, and more I think of a challenge for the government to think about, but also how we look to the futures. How do we actually get growth into the UK economy? It's difficult to see anything coming through in the short term.